Hey traders, welcome to Charts and Coffee. I know, no intro today. We're going to get right to it. I'm going to have a slightly tight schedule here in the morning. So if you have any questions, feel free to type them in now. We're going to cut this show short by about half. So let's get to it. There's a lot that I wanted to cover with you all, and we'll get into it again in the free video tonight as well as in the premium video. And as we wrap up this second month of the quarter, as we are really getting into the last handful of trading days for the month of February, I've been really thinking about what it is that, has allowed me to be a trader for 35 years, has allowed me to not blow up an account during that time. Doesn't mean that I don't have losing trading months, just means I don't have a losing trading year. And ultimately, I think about it's a lot of the language and the way that as traders, we have to think kind of counterintuitively and program our minds for consistent account growth. Everything about what you and I are doing in front of the computer every morning is about how do we consistently trade our account in such a way that we have account growth. And that's really the key. It's not sporadic account growth. It's not, 2020 was good. It's how do I make sure I'm putting something in my account year after year, right? And not even day after day or week after week, every month after month. When we look at the span of 12 months, were we able to make any progress in our account? So sadly, I'm going to have to unexpectedly cut the show short, but we will get into this tomorrow for sure. All right. I want to make sure that we can cover all that. And actually, I'm going to share in the YouTube the link that's on the far left side of my screen. This is something called Workflow. You just click on the link and you can see the notes around the language of consistent account growth, the things that we have to be fluent in so that we can grow our account. Let's take a quick look at the broader averages here. I've got the S&P in front of us, and you can see that the last two trading days, OPEX and Monday's trading day, were pretty heavy. We're looking at maybe what could be a minor low forming. So this would be the center candle of a 3-candle pattern. And that low at 59.77 3/4 will be an important one to keep an eye on. Can we close above it today? This is going to be the completion potentially of a minor low. And then we'll talk about it tomorrow if indeed that does happen. A couple other things I'll mention on my secret squiggle. Staying above this midline is going to be really important. So not only am I looking at price and participation, I'm also looking at layers of overbought and oversold. Even though this is a trend, the secret squiggle works really well in a trend. And as long as it's remaining on the upper half of this oscillator, it tends to be more resilient to the upside. All right. So with that being said, I mentioned if you can get your questions in quickly, we can cover a handful of them, and then I'm going to have to run. So I apologize for that, but I at least wanted to go live and share the notes with everyone, because if you have some time to review those notes, the link that I shared with you all, it's going to be really powerful to take those early steps into programming your mind for that consistent account growth. All right, first up, Jas is asking about Boston Scientific. This is probably one of the better symbols to keep an eye on in the group that it belongs to. It's got the trend, right? It's above that upper half of the secret squiggle. And you'll notice that it's printing consistent green candles. These are not traditional candlesticks, gang. These are candlesticks that are programmed to change color based on price and participation. Is it bullish? Is it bearish? Or is it neutral? These are clearly bullish. Now, the challenge is going to be what will be the support level? Where are the buyers going to step in? Where is the floor? Where is the demand on this chart? And, I don't mind this level around 104, Jas. I would say probably keep an eye on that 103 level as well. The deeper the pullback, the more favorable the risk reward ratio is. Would it surprise anybody to hear that a lot of traders, unfortunately, are working with upside down risk reward ratios? In other words, they're willing to make 1, but risk 3, right? That is an untenable way to consistent account growth. It simply won't happen. So if we can find at minimum in the early stages of a trade to start with a 1-to-1 and then graduate to a 1 risk to 2 reward type approach. And this is that slide. And when the trade is moving in our favor, can we lock in certain profits? Can we put the risk reward in our favor as the trade does what we want it to do? For example, this is a trade that I took on Friday. This is Cisco. Bought the dip, took some heat yesterday. How much unrealized loss can a trade handle? Because if the journey to the target is untenable, the trade is not valid. We have to cut it loose. That's a risk management muscle a lot of traders simply don't have. Now, this morning, we're going to be flirting with the first target of this trade. And this is where we're going to move the risk reward ratio in our favor. Think about the processes that you have to understand a lot of these things. Again, high water mark, average loss versus average gain, risk reward ratio, unrealized risk, aka heat, and risk to the account. These are all the language of consistent account growth. And one of the first steps is understanding, making the trade as it moves in your favor, having that favorable risk reward ratio. That's one of the things we're going to do here in Cisco right off the bat. Now, again, what if I'm doing something like that in BSX? To ask your question, the thing that I'll have to do is wait for where I can buy, have at least a 1-to-1, if not potentially a 1 risk to 2 reward ratio, knowing that very likely that 107 level, if not really the 106.20 level, is going to be the first obstacle. Who here has read Ryan Holiday, The Obstacle is the Way? That's a lot of the trading mindset. What's in the way to progress? I don't want to enter the trade at the obstacle. Think of it this way. I want a running start into that obstacle. If I'm going to bang down the door, I'm not going to sit 2 inches in front of it. I'm going to run 15 feet in front of it and hit it at full speed if I can. That's a lot of the way market movement is. And if I can buy that dip, I've got more space to take a reward, less risk, and I've got that running start that if we're going to take out 106.20 or 107, we're going to have that ability, more likely to do so. If not, I'm going to move that risk reward in my favor. Gang, that 10 minutes flew by really quick. I apologize for the short charts and coffee, but I thought if nothing else, I was able to share this link with you all. Please read it. If you have any questions about it, I'll be back here, same time, same station tomorrow for charts and coffee. And I'll cover a lot of this in the free video. I do want to mention tomorrow is the cutoff for our Sector Secrets Mastery Immersion. 3 months with me, getting my trades and weekly lessons so you can understand things like what we just talked about for the last 9 minutes. This week, we're going to talk about understanding risk and trading size. That's the holy grail, gang. And then next week, we're going to do the same thing specific to futures. Do I trade futures? I've been doing it since I was 15 and a half years old. Love futures, but we have to understand the risk reward of such a highly leveraged type of asset class. So this is what's coming up the next 2 weeks. The cutoff is tomorrow, gang. And yes, it will be a hard cutoff. So check out my.simplertrading.com/immersion. Check out the notes that I just sent you all. This is what you have in that link. And we'll talk again tomorrow, gang. Be good to each other. I'll talk with you soon.